All right, what's good? What's good? What's good? She ain't know that. See the light on my chest, my head next to her breast, my mind all in the clouds. Just bought an ounce of the best. No talking when I'm off that loud. I can't quit, so she pissed. You know I'm gonna point it around, but it's hard when everybody on your dick. No real niggas that's crips. I know real niggas that's bloods. No real niggas that's thugging. Like you ain't know what's up. All right. So what's good? What's good? What's good? So we're doing this scalping strategy. So I've developed this thing for I don't know how long ago, probably a year ago at least. And honestly, I feel so good about it. I'm still in the data collection phase because all these things always change. But I just want to give a general picture of the strategy all together and put all together. Okay, I'm trying to keep it under 15 minutes, but we'll see. It's 4:20 right now. Let's go. All right, so scalping strategy. Let's go down. Let's do it. So basically, we use the 15-minute, the 5-minute, and the 3-minute, and combine all of them. Okay. That doesn't mean we don't look at the bigger picture like the daily 240 or the 60-minute, but essentially our tradable setups are only allowed on the 15, 5, and 3. Okay, they're short, small day trades. These trades last no more than 5 minutes. I mean, they go quick. It depends on the target, how far away it is. So, using the 15, 5, and 3, find a bubbling opportunity. So, first of all, find a distal line protecting free space, okay? And then let the time frames develop into a tradable setup, okay? The vocabulary here is a bull fib is equal to a bull fib is just when a bar is closes near its high and its body is much greater than its wicks, so that means it's a strong move in one direction. Base candles are not a strong move in one direction and signify imbalance in price, but they close in a certain direction. Okay, they do need to. Entry bar is just a bar that meets all the criteria and usually is following these bars. Okay. All right, let's do it. Tradable setups is, and we'll go through all of these. Okay, we're gonna go through all of them. Oops, we're gonna go through all of them right now. So the tradable setups right now, I have 1, 2, 3, 4, 5. I think just 5 right now. But 2-bar bubbling, 2-bar bubbling base, 2-bar bubbling base and open, and then the comeback, and then the holding level. And all of these probably don't make any sense to you right now, but they will. Okay, they will. Watch and learn. So this is the first bits of these tradable setups. We're going to go through all these tradable setups, and then we'll have a couple examples and how to do this. So holding level, if you can see, I hope you can see. You should be able to see this. All right. So holding level must be at least 3 bars, all the same color, looking to break into the free space. So if you can see this picture and you look at it, it's like, okay, you see that there's a red, so there's a green bar and there's some free space below. There are some splits, okay, try to ignore those. This I wouldn't do. This, there's probably an issue there. There's probably a small zone here. Depending on what time frame this is probably the 3-minute to signify this as decent free space. If this was the 15-minute, I mean, this would definitely be a 3-minute area of you don't want to be short into, okay? Because we're doing free space. We're not trying to ride through any waves at all. We're trying to ride. This thing should go straight into our target. It should not slide around. We shouldn't try to break through an area. It shouldn't break through anything. It should be already broken out and sliding in our direction, and it should not come back. That's the whole point of this scalping strategy. So it signifies this free space below. There's a bull fib
obviously here on this green bar, and then there's a red bar. It's a base, and then there's another red bar. And you can see that these are pointing at the distal line. See this red line? It's a little off these wicks, but this is the distal line, okay, in which it should break out of. So if these two show a distal line here, and if this current bar, which is not printed yet, this current bar went all the way up here, grabs sellers, and comes all the way down and actually busts through this distal line, which is these previous lows, it actually breaks through on this current bar. We go short immediately because the momentum is totally down, and we have the stop all the way up here. Okay, we have the stop all the way up here, and then we probably have the target before this next opposing zone. Okay, that's the holding level. A holding level is just the fact that there's multiple bars in here, and it just takes a little bit longer to present. So in this case, this is a holding level as well. Try to ignore this giant split here. I would highlight this as all sellers in this box, in this entire wick, in this entire split. That's sellers, okay? That's sellers. So that's not free space, gentlemen. That is not free space. But this example is just showing just this green part, okay? And just ignore this part, okay? If this was free space, this would be valid. This is valid setup right here, except for this free space, and remember, that's number one. Find distal line protecting free space. Guys, it has to protect free space. This distal line right here, this breakout line right here, which is this full fib, so these three bars generate a holding level where it's continually going up and it is definitely green. Oops, it's definitely green, and it's printing this high right here, and the momentum's upwards, and it retraces into this area, and creating a demand zone if we can get a bull fib out of here, a leg out. This would be a rally-based rally type event. But all around, we can kind of understand that this is a holding level because there's a consecutive bars going in this direction, and we're headed upwards, and there's should be free space up to the left. So at the break of this bar, we would go long, and we'd have our stop right at this entry bars low, okay? Unless, yeah, we'd have the entry bars at this low, okay? That's a holding level. And we'll go into the specifics on everything if you want, because our stop is always placed at the furthest out, because we're going to combine all these things together. It's going to get crazy, 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 crazy. All right, 2-bar bubbling open, okay, 2BBO. So this is just what a 2BBO looks like, okay. 2-bar bubbling open, which means essentially there's a red bar in its base, okay. Nope, not a base. I mean, this red bar is almost a base. You can see that the body of this red bar is greater than the wicks. So you add the wicks together, and the magnitude of that is less than the body. So it's technically a bear fib. Okay, it's a bear fib. And then we see that it's totally goes crazy past its open and past its high. Actually, past the next bar's high too. But we just count it as a 2BB open, which means it tests the open instead of a shallow retracement. It is a large retracement. And guys, this would only be valid if this current bar prints red. I mean, that's incredible, wouldn't it? This current bar prints red, and that would break out lower, and we'd send this thing lower. We'd short and put our stop right at the top of this bar, and we'd think that this bar would turn and print red, looking very dark, and looking like this will be the top. So apart from this split, there's free space below. We could probably target this area, but the split is not a good sign. I mean, you try to avoid the splits, okay? It's dicey. It gets dicey. There's no question about it. It gets dicey around here, but we definitely want to avoid any demand zones. Okay, we're not here to battle. I mean, we're just here to ride this little wave for for a short period of time. Okay. All right. Next is two-bar bubbling base open. Okay. So what we both have here, two-bar bubbling open, but we combine here. It's two-bar bubbling base open. So instead of a so this is the most simple example. Okay. So this is a free space below this bottom wick. This yellow line is the distal line of this bare base. Okay. Remember the vocab. Bare base is the body is less than the wicks, and it closes red. So in this case, the body is less than the wicks of this middle bar right here, and it closes red, and it prints a distal line, a wick to break. Okay, a wick to break. And now, luckily, this entry bar actually came up and went above this bar altogether, but all I had to do is test this open to be valid. It does need a little bit of a wick. Guys, we cannot have a bar not retrace, okay? We need an upper wick. It needs to have an upper wick to be valid. So in this case, luckily, a lot of times this doesn't work out, but this time it did. It went up and it created a top wick. So this candle was green at one point, signifying very bullish, but then came down and actually broke this bear base's low, and we enter a short, and then we take it all the way down to the end of the free space, which is probably around here. Okay, so that's our trade, and then we put our stop at the entry bar's high. Okay, that is in two-bar bubbling base open, and it's a base open because the base candle is what we're playing off of, and the open is where it got to. So by base open, this is the only confusing thing in this entire strategy. It's not always has to be at the open. Okay, it can go past the open, can get into the wick territory to be qualified as the two-bar base open. So this case, you can see that it's kind of a similar setup. This entry bar, if it turns red and breaks this low, we're going to go short. And this was a base, right? This was a red bear base, okay, in this free space below. So, but keep in mind, bear base open. This obviously went past the open. This entry bar went past the base's open, which is right here. It went past its giant wick here, and it passed it. So, but it's still qualified as two-bar base open, okay? I just wanted to make that clear. So that's the only thing that's kind of confusing with the naming. Oops. With the names, but apart from that, these things kind of describe themselves, really. Okay. Oops. All right. Two-bar bubbling open. This is a good one. This is the classic 2BB. Oh, so it's kind of like a 2BB, which we haven't even said yet, but a two-bar base open. So this is a bear fib, which is the body is greater than the wicks, and it closes near its low, and then this comes up, hits that open area, or it can get into the wicks, okay? As long as it's past that 66% retracement, measured from the bottom of the bear fib to the top of the bear fib. Or in a bull fib case like this, it would be the bull fib high versus the bull fib low. And if it's a 50% retracement, a 66% retracement, okay? If it passes that 66% retracement, then we are in the open territory. It's qualified as an open candle, okay? So in this case, we definitely do bear fib. It went into the open, came back down, actually break that low, we enter short, and we ride the free space downwards until we got to get out, okay? So, kind of the same thing here. We don't have to go through every example, but this is kind of the same thing. It's a bull fib here. See, it's bull fib. It's not a base. And then this came down and went barely past that 66% line towards this open. And came back up, broke this high. So this was a really dark red candle, and actually broke this high and broke into the free space. So that's a great trade. Okay, especially if it comes from a higher time frame demand, which we haven't even got into yet. Okay, so the next tradable setups is come back. Okay, we're almost done. This is the last thing. So come back when the bar reaches into an opposing zone, on the other side. Entry when the current bar breaks its high. So essentially, like I was saying with that with the wick, this is what a bar looks like without the wick. So you can identify now that we've learned that this is a bare fib, and it breaks a distal line here, and a wick, a low, to break lower. But you don't want to take this because it did not retrace at all. It needs to have an upper wick to signify it to go down. In this case, there was no upper wick at all, and it actually just irrationally dips lower and lower, and it actually goes into a demand zone. It goes right into a demand zone, and it's coming back out of it. And this is a fantastic entry to go long at this line right here at the break of its high to create an upper wick for itself. A lot of times you'll see a wick go down where it's into a demand zone and it actually turns green and it prints very bullish. It prints very bullish. So as much as crazy as it sounds to go long there, all the way at the top of the high, it first of all, it saves you a lot of errors, because if a demand zone, you just take the demand zone, you might not win it. But if you take the demand zone, or don't take the demand zone, sorry, and you actually just take the acceleration of price once it breaks this high, it can definitely provide some profit. Same here with the low. So it breaks this low, enters into that free space. Keep in mind, it did not create a bottom wick yet, and it's got to create a bottom wick, especially if it's coming down. So you can tell these also broke previous high, also broke previous low, which helps. Okay, size enhancer, entry bar, previous 3. Okay, all right. So what's next is 2-bar bubbling, classic 2BP. Okay, you can kind of see in this picture. This is a bear fib, and if it comes up, I think it's at 50%, but it's probably at 66% retracement. Whatever. I'm saying the full fib. You see these yellow lines that see right under this line. We're ready to break. And it comes down, retraces 50%, comes back up in the same bar, breaks that high, breaks that this line, and we go long, and we can easily sidestep right into our further. So that's classic 2BB. A lot of this happens a lot of time where it comes up, prints full fit, prints very close to its high, comes back down, comes up first, breaks it. Okay, so those are the tradable setups. So you learned about all the tradable setups. They're important because that's what we are piecing together when we're looking at the market. We're constantly looking for these things. And it is not tiresome. It's actually fun. I think it's honestly fun. But it's work. It's work. You gotta work for your money. You know, no man shall. What is it? No man shall eat. No man. No man shall eat without work. I don't know. Something like that. All right. So example 1, guys. What would we do here? Okay. I didn't even fill these in, but you can obviously see that I would probably do a wick. I would probably do a comeback. Okay, so you see that this wick is not very high. You might think it's it's a bear fib, it's a bear base, and we want to go down and short that bottom wick. That's probably not a good idea, because there is no upper wick on here. Okay, it needs to have an upper wick, and it needs to go past that 66% retracement, especially if it's bare base or bull base. Okay, bull fib. The fib bars don't need to go to past the 66% line. Okay, they just need to go like around the 17, past the 17% line, which is basically near the 33%, which is a little bit right here. Okay. But there's a bare base, so we need it to come back into the open a little bit and then go red. In this case, it's just kind of straight red, so that's actually a sign to go use a comeback method, which is if this goes green and breaks that high, we go long. Um, Now, I don't. There's opportunities flying all over the place all the time. Okay. What makes us different is the free space, which is in this case there's not much free space. You can tell that this body of the candle is very small, unless we like lengthen it to make it look bigger, but it really isn't that big. Um, it does depend on the if this is the 15 minute or 5 or the 3. So I guess I'll share a little secret. I'm looking for a comeback right now. Obviously, I'm looking for a comeback, which is this, right? Which is this. Dipping into a men's zone to come back and breaking that high, creating a green bar for itself. Finally create that top wick. So this is finally we want to create a top wick. Say this is the 15-minute chart, okay? Say this is the 15-minute chart and see that top is that distal line. Now the 5-minute and the 3-minute can it takes a couple minutes, or a couple bars, but it can actually develop into a long position. So we can actually develop this thing into a long position, and we go high, break this high, and go upwards. Okay, but remember, we need two time frames to interact with each other. Like all the way at the top, we did the 15-minute, the 5-minute, and 3-minute. We need two of these. It doesn't matter which ones. Okay? We just need two of them. Okay? Majority rules. We just need two of them to agree. Okay? So if there's two setups, this is say the 15-minute, this is the 15-minute, and it's a comeback. Okay? This is that distal line that's there. And actually, there is a say this. I'm going to put this right next to it. Okay? Say this is the 5-minute. Okay? So this current bar is high. Say that current bar's high is actually right here. This low's high, right here. This high. Okay. Sure. Goes down. Yeah, whatever. It wouldn't be that because it went up and down. But whatever. Say this is the 3-minute. It's off cycle. Okay. This is the high. This is the high. Both of them have that same distal line. But this bullfit doesn't get too close to this, so I probably wouldn't go long here. So it's tough. It's tough to say. I don't know. I don't know yet. But we could go long at this bull fib, put that stop right here. But if the 15-minute candle, because this is like the 3-minute, if the 15-minute bar, this bar turns around right immediately and goes up and breaks this high, which is breaking this high, I would actually have to put my stop in the 15-minute distal line, or 15-minute stop area now, which is this goes high, breaks its high, and actually put my stop there instead of right here. Oftentimes, I'm telling you, oftentimes they really match up, and we not only have the same exact line, which is not in this example, but we have the same exact breakout line, but we also have we also have the same stop loss. Okay, we have the same stop loss, exact stop loss. So in this case, this is just vocabulary. You know, in segments, this is a bull fib, this is a bear fib, and then this is could be an entry bar, whatever. And keep in mind, so when we're going along there, as on that comeback, keep in mind, look at the this is where the sellers are hanging out, the supply zone. So keep in mind, you should be buying inside of this. Okay? You can buy right at this green line for a comeback or whatever. But this is the 15-minute time, and it has to be have to collide to the you know, right? Um, minute shows comeback. This possible screen folds over. It breaks the green line. Luckily, 5 minute looks like it's the same exact as the line. So luckily, the 5 or 15-minute agree on this line. That's not necessarily necessary to place the trade. What's necessary to place the trade is that they both are looking long. They're both looking to go long. Okay, and if 60 minutes going long. So if this was the 15-2, I mean that would be 3 time frames going long that want to go long. So, and I haven't figured out how much targets are, but I'm thinking that 1-to-1. Thinking of 1-to-1, honestly, but I don't know. I haven't done enough data analysis on that yet. But overall, it's looking good. I can't tell you. I mean, it's looking super, super good. I like the strategy. So I think we'll just see how it goes. Just to show you what's going on, I got my little volatility. The only things I do is NQ, gold, and crude oil. Just because they move and stuff. They seem to be the best for the strategy. But I can see that if it's this is like the gas pedal, this indicator. Yeah, it's just basically fast or slow, and so on. So I'll do some trading because this stuff goes fast and it's actually pretty fun to do. And the examples just pop up everywhere. So it's not open right now, really. So I mean, kick this off at 8:30. We'll do a couple episodes of just trading. So I think it'd be dope. You can see the whole system going, and we'll see how it runs. And we gotta remember we gotta totally we gotta totally track this stuff. And you can see how we can track the trades, which is right here, the risk of the trades, whatever, and we can just know how far they go. This is a big column right here, how far they go by the end of the day. And a lot of the times where like you're risking 12, it goes 45, or where's this crazy one? There's some crazy ones that you go 0.6, you go to 28. What is that? 6 times 4. I mean, that's a 1-to-4 risk reward relationship. I mean, this one went 1-to-1. This one didn't work. This one broke, wasn't it? Yeah, my risk is 8, and it only went 0.75, and it broke. So this one went 2 and went 10. So that's times 5. This one didn't work, not even 1-to-1. This one times 9. I mean, come on, or whatever, 9 times 7, whatever. I don't know. Some of them just go. This one went perfectly 1-to-1. So you can kind of see what's going on. And what we're going to do is analyze which time frames, which setups that we did, 2BB, 2BB, CB, come back. All these are familiar to you now. And basically see which combinations work the best for, how far they go. Right. So comebacks actually don't say they usually go. They seem to find a trend, honestly, more or less. If you have a comeback involved, it's going to go more. It's going to go more than 3-to-1. or something like that. And you see that a 5-minute, 3-minute holding, I mean, those are generally speaking going to grab that 1-to-1 and get out. But eventually, we're going to gather so much dang data because we can gather. Dude, we can trade 5 to 10 trades a day, and we can generate some data by the day, and we'll have thousands of rows of data. Okay, and then we can really discover what works and what doesn't. Okay, the system itself is strictly find a distal line protecting free space. We need to find that free space and then let the time frames develop into a tradable setup and trade the setup and use this. And as long as 2 time frames agree out of the 15, 5, and 3, we can take the trade. And then we put our stop on the furthest away possible, and we put our target. In the simulator, we don't have a target. We just figure out how far it goes anyways. But as of now, we just do 1-to-1 target, whatever. But the whole point is to see how far. I don't even know how far it should go. We don't even know if it's a 1-to-7 we're looking at to optimize this thing, or a 1-to-1, or like a 1-to-0.5. We don't even know if it's just a super small scalp or not. So pretty variant right now, but we're not taking all the same setups. Okay, but we are taking the 15, 5, and 3, and they are protecting free space. And now we're going to make this clear, unclear. We're going to make it all clear. Okay, we're going to make it all clear. So we're going to just see how it goes. You'll see some episodes of the trades, of actual trades. Sounds good. Thanks for watching, eh?